Have you ever stopped to think, if the real crypto revolution isn't just about, like, digital coins or hype cycles, what if it's actually much bigger? About bringing, well, everything valuable from the physical world onto the blockchain. I mean, skyscrapers, bonds, even things like carbon credits. It sounds kind of futuristic, right?
It does, a bit like sci-fi.
But it's really not. It's happening now. This shift is underway, and honestly, it could completely reshape global finance. Okay, so let's unpack this a bit. Today, we're doing a deep dive into real-world asset tokenization, RWAs.
Yeah, RWAs.
Basically taking tangible stuff or even intangible assets from the normal economy and turning them into digital tokens on a blockchain.
Exactly.
And this isn't some small fringe idea. It feels pretty fundamental. A bridge between old-school finance and the efficiency and transparency you get with blockchain.
It's a powerful combination.
And the scale. We're talking massive potential here. Sources are throwing around numbers like not billions, but trillions of dollars. Maybe even 10, 15, 16 trillion within the next decade or so.
The projections are staggering, yeah.
So our goal today, our mission for this deep dive, we want to really get into how this RWA tokenization actually works, like practically. And why are these huge, normally cautious financial institutions suddenly so interested? Actively involved even.
That's a key question.
Critically, we need to talk about Chainlink. Its role seems absolutely essential here, like a trust layer making it all possible.
The infrastructure piece.
Yeah. So by the end, you should have a solid grasp of the mechanics, but also what this huge shift could mean for you. Whether you're investing, just curious about tech, or keeping track of where finance is headed, we've got some pretty surprising facts and insights from our research today. Should be some real aha moments.
And what's really fascinating, looking across all the sources we've dug into, is how they all point in the same direction. It's a consistent story. Tokenization isn't just, the flavor of the month in crypto. It's being treated as a serious strategic move by major players. We've pulled stuff from talks with crypto CEOs, financial news reports tracking institutional plays, deep research from folks like Boston Consulting Group, Masari.
Heavy hitters.
Yeah, and crucially, we've also looked at what international bodies are saying. The IMF, the BIS, the Bank for International Settlements. It shows this isn't just a crypto bubble conversation, it's global finance grappling with a major potential evolution.
That range of sources definitely gives it weight.
Yeah.
Okay, before we really dive into the mechanics, just a quick thing. If you're getting value from these deep dives, if you like us digging into this stuff and trying to make sense of it for you,
yeah, it really helps.
It does. So please take a second to like this deep dive, subscribe to the channel, hit that notification bell. Seriously, your engagement, even just a like or a comment, it helps us out massively with visibility, with the algorithm.
Let's just keep doing this.
Exactly. Let's just keep making this kind of content for you.
Right.
So thanks in advance for that. It makes a real difference. Okay, foundations. Real-world assets. Tokenization. Let's nail down what we actually mean.
Good place to start.
So RWAs. Basically anything outside a blockchain that has value in the, let's call it the traditional economy.
Right. Tangible or intangible?
Yeah, like government bonds, right? Or huge amounts of real estate offices, houses, stocks and companies, commodities, gold, oil, even wheat.
Art, collectibles.
Exactly. Stuff with established real-world value. Now, tokenization, that's the process of taking the ownership or even just a piece of the ownership of those assets and representing it as a digital token on a blockchain.
And it's more than just a digital certificate.
Oh, yeah, definitely. It's not like just scanning a deed. It's embedding the ownership rights, the rules, the value into a smart contract. That contract lives on the blockchain, that distributed ledger. So the token becomes the representation, the asset.
It gives it a digital identity.
Exactly.
Yeah.
And all the blockchain goodies that come with it can't be easily changed. It's transparent. You can program rules into it.
And the benefits there are, well, they're pretty huge. It's not just a minor tweak.
Let's break those down. What are the big advantages?
Okay, first up, liquidity. This is massive for assets that are traditionally hard to sell quickly. Think about trying to sell a big office building. It's slow, cumbersome, expensive, takes months, maybe longer, lots of middlemen.
Right, lawyers, brokers.
Yeah, but if you tokenize it, suddenly ownership can be traded like almost instantly, 204/7. On a global digital market, you're cutting settlement times from weeks down to minutes, maybe seconds. That's transformative.
Okay, instant trading. What else?
Fractional ownership. This is a big one for democratizing access.
Meaning, well, that multi-million-dollar skyscraper Normally, only big institutions or super rich individuals can buy in. Tokenize it, and you can split it into thousands, millions of tiny pieces represented by tokens.
Ah, so smaller investors can get a piece of the action. Exactly. It lowers the entry barrier dramatically. Lets more people participate in asset classes that were previously off limits.
That makes sense. Opens things up.
Then there's transparency. Every single transaction, every ownership change is recorded on that public, immutable ledger.
Harder to commit fraud then.
Much harder. Reduces disputes. And crucially, it cuts out a lot of the intermediaries we mentioned.
Less need for brokers, custodians, maybe even some lawyers.
Potentially, yeah. Which means lower fees and less operational headache compared to the traditional systems. And all this leads to global accessibility. If you have an internet connection and a crypto wallet, you could theoretically invest in assets anywhere in the world. No more geographical barriers or huge minimum investments blocking you.
Wow. Okay, so these aren't just small improvements. They're fundamental changes to how markets could work.
Structural upgrades, really.
So putting it all together, it's like taking a physical thing, a bond or a building, and giving it digital superpowers.
That's a good way to put it, yeah.
Instead of wrestling with brokers and banks to buy a whole corporate bond, waiting days for it to settle, paying fees, you could maybe buy a tiny tokenized piece of it instantly, globally, almost fee-free.
That's the vision. The efficiency gains are potentially staggering.
It really feels like it could lead to entirely new kinds of markets. More efficient, maybe fairer, more dynamic.
Definitely more dynamic.
Okay. But the big question a lot of people probably have is traditional finance actually buying this? You know, they're usually so cautious, so worried about regulation.
Right. And an answer, based on everything we're seeing, is a pretty strong yes. This institutional warming trend is one of the most important parts of the story.
Any examples?
A really key one our sources highlighted. Chainlink's CEO, Sergey Nazarov, has been having direct, detailed talks with Paul Atkins.
The former SEC commissioner.
Exactly. And they're specifically discussing the future of tokenization.
That feels significant. That's not just some crypto conference chat.
No, definitely not. Engaging directly with someone like Atkins, a former top regulator, it signals a real shift. It shows regulators aren't just aware, they're actively warming up to these conversations about tokenization.
Moving beyond just skepticism or ignoring it?
Precisely. It suggests a move towards understanding, engaging, maybe even figuring out how to embrace it rather than just shutting it down.
And why is that so important for the big institutions?
Because regulatory uncertainty is like kryptonite for them. Banks, asset managers, they need clear rules to operate. This kind of high-level dialogue, the fact the SEC is engaging, it's a massive de-risking factor.
It makes them feel safer to explore it.
Exactly. It starts to pave the way for maybe a more formal structure, more predictable rules, and that's absolutely critical to unlock the serious big money these institutions manage. It lets them shift from just watching to actually participating without that constant fear of regulatory blowback.
Yeah, that makes total sense. That regulatory dialogue is like the green light they need. It changes the whole calculation from a risky experiment to a potential strategic move.
Right. It's the difference between a pilot project and full-scale deployment.
And when they start feeling safer, that's when the real capital could flow in, right?
Yeah.
Validating the whole thing. Speaking of capital, let's talk about the size of this opportunity again, because those numbers are just wild. You mentioned Boston Consulting Group, BCG, projecting a multi-trillion-dollar sector for RWAs on-chain.
Yeah, and some of their analysis, backed by others like Masari, pushes it even higher, maybe $10 trillion, even up to $16 trillion by 2030.
16 trillion. It's almost hard to comprehend that number in this context.
It is, but here's how to think about it. Look at the size of existing traditional markets. The global bond market, easily over $100 trillion. Global real estate, hundreds of trillions. Equities, tens and tens of trillions more.
Okay, so the existing pie is enormous.
Exactly. So when we talk $10 to $16 trillion in tokenized RWAs, we're not inventing value. We're talking about tokenizing a relatively small slice of those huge existing markets.
Like maybe 5 or 10% of global assets.
Something like that. Even that small percentage gets you to these massive figures. It's about making the existing value pools more efficient, more accessible via tokenization.
So the projection isn't just wishful thinking. It's based on the sheer scale of what's already out there.
Right. It contrasts sharply with crypto's early image as just speculative digital stuff. This is about utility, upgrading finance, targeting tangible, established value.
But realizing that potential, hitting those trillions, It's not automatic. It needs the right plumbing, right? The infrastructure has to be rock solid.
Absolutely critical. And that leads us straight into a core challenge in blockchain, the Oracle problem, and why Chainlink is so central to this whole RWA discussion.
Okay, this is where it gets really technical, but also super important.
Yeah, it's fundamental.
Because you can't just wrap an asset in a digital token and call it a day. That token needs to know what's happening in the real world.
Constantly.
Right. Tokenized bond needs the latest price, yield, credit rating. A piece of tokenized real estate needs verified ownership, maybe appraisal data, rent info.
Carbon credits need verifiable environmental data.
Exactly. All that external data. If the blockchain can't reliably get that info from the outside world,
The whole system breaks down.
the token doesn't reflect reality, smart contracts can't execute correctly,
Right.
trust is gone.
And that's the Oracle problem in a nutshell.
So what's an oracle in this context? Remind us.
An oracle is basically a secure bridge. It's middleware that connects real-world data sources to smart contracts on the blockchain.
Like a translator between the off-chain world and the on-chain world.
Kind of, yeah. But a very secure, reliable translator. Think of a smart contract for tokenized stock dividends. It needs an oracle to tell it securely, here's the correct dividend amount, pay it out now.
And if that data feed is bad or manipulated,
Disaster. The wrong amount gets paid, or maybe it doesn't get paid at all. The value proposition collapses. That's why secure, tamper-proof oracles are non-negotiable for RWAs.
okay, so enter Chainlink. Why are they seen as the leader here?
Well, Chainlink positions itself precisely as this essential trust layer. They're not just an oracle provider, they're the most established, widely used one. And crucially, their system isn't just one single source feeding data.
Right, it's decentralized.
Exactly. They use decentralized oracle networks, or DAWNs. Multiple independent, vetted node operators fetch data from many different sources. They aggregate it, cryptographically sign it, and then deliver it to the blockchain.
So multiple layers of security and redundancy.
Yes. Redundancy, cryptographic proof, decentralization.
Mm.
It all works together to make the data highly reliable and resistant to tampering. For big financial institutions, that level of security and auditability is paramount. They can't afford a single point of failure with potentially trillions at stake. Chainlink's design directly addresses that need for institutional-grade trust.
Okay, so if tokenization is the future, and oracles are essential for it.
Then the infrastructure providers like Chainlink become incredibly important, existentially important, you could argue, for the whole thing to scale.
There was that analogy in the sources.
Yeah.
Comparing Chainlink to AWS.
Yeah, Chainlink may become as critical as AWS for Web 2. That's a powerful comparison.
What does that imply?
Think about AWS. It provided the basic cloud infrastructure servers, storage, networking that let companies like Netflix, Airbnb, countless others build their businesses without managing their own hardware.
Right, it was foundational plumbing for Web 2.
Exactly. Chainlink aims to be that foundational data and computation layer for Web 3, providing secure access to real-world info and off-chain compute so developers of tokenized assets, or dApps, don't have to build their own insecure data bridges.
So potentially, Chainlink becomes this invisible but essential utility that trillions of dollars in tokenized value relies on every day.
That's the implication, not just a feature, but core infrastructure.
That AWS comparison really lands the potential importance, doesn't it? Like the electricity or the internet itself, you don't always see it, but everything depends on it. And for folks holding LANK, the token, the connection seems pretty direct then.
It does. As institutions adopt RWA tokenization more, the demand for secure Oracle services goes up, and Chainlink is the dominant player.
So every time a bank tokenizes something new or a DeFi protocol uses RWAs.
They often need Chainlink's oracles to feed in prices, verify data, execute contracts based on real-world events.
And that drives demand for the Link token itself because
Yeah.
it's used within the network.
Yes, the Link token is integral for paying node operators, securing the network through staking, incentivizing good behavior. So increased network usage generally translates to increased demand for Link.
Which makes it different from purely speculative coins. The demand is tied to actual utility.
Exactly. It provides a more fundamental potential growth driver linked directly to the adoption of this multi-trillion-dollar RWA market, a market that arguably needs these Oracle services to function.
Okay, so we've talked theory, potential, infrastructure. What about actual real-world stuff happening now? Are we seeing adoption?
Oh, absolutely. We're moving beyond just theory into tangible proof points. Significant projects and institutional pilots are already underway.
Like what?
Well, a really interesting one is MakerDAO, huge player in DeFi, right? Known for the DAI stablecoin.
Yep, one of the biggest decentralized stablecoins.
They've made a major strategic shift. They're now using billions of dollars worth of tokenized U.S. treasuries as collateral to back DAI.
Wow. So moving from just crypto collateral to traditional assets.
Exactly. It's hugely significant. A major DeFi protocol embracing traditional, low-risk, yield-bearing assets to strengthen its stablecoin.
Why is that a big deal?
It shows a concrete use case beyond just crypto stuff. It's blending the stability and yield of TradFi directly into a DeFi product, making DAI potentially more robust and attractive. It bridges those two worlds in a very practical way.
That does feel like a statement about where DeFi might be heading.
Definitely. And it's not just DeFi natives. The giants of traditional finance are making moves too.
Like BlackRock.
Yes, BlackRock, the world's largest asset manager, over $10 trillion.
They are actively running tokenized fund experiments.
So not fully rolled out yet, but they're testing the waters. Right, but the fact that BlackRock is doing this sends a massive signal.
Yeah, if they're taking it seriously.
Exactly. It tells the market this isn't just some crypto sideshow. It's being seriously evaluated by the biggest players for the future of finance. It adds immense credibility and probably makes competitors think they need to explore it too.
Okay, BlackRock is huge. Any other examples?
Wando Finance is another key one. They've specialized in tokenizing short-term U.S. government debt.
Making treasuries accessible on-chain.
Basically, yes. So investors who might normally find it complex or expensive to access these assets can get exposure through a blockchain interface.
So you get the relative safety and yield of treasuries, but with blockchain efficiency.
That's the idea. Instant settlement, global access, potentially lower minimums. It brings a core traditional finance asset onto the blockchain rails.
Another bridge being built.
And speaking of bridges, perhaps the most monumental collaboration is the SWIFT and Chainlink pilot.
SWIFT. That's the network banks use for international payments, right?
Exactly. The Society for Worldwide Interbank Financial Telecommunication. It's the backbone of global finance messaging.
And they piloted something with Chainlink.
Yes, a major pilot testing interoperability for tokenized assets involving over a dozen major global banks.
Why is that so important?
Because it's not about replacing SWIFT. It's about connecting the existing trusted global financial system, SWIFT, with blockchain infrastructure using Chainlink specifically for these tokenized assets.
So making it possible for banks to use their existing systems to handle tokenized assets seamlessly across borders.
That's the goal, paving the way for RWAs to move through the current financial plumbing, but with blockchain benefits. It's about integration, not replacement.
Wow. Imagine your bank being able to settle a tokenized real estate deal instantly across borders using systems they already understand, enhanced by this tech.
That's the kind of power this pilot points towards. It makes that global liquid RWA market feel much closer to reality. The foundations are being laid by the incumbents themselves.
It's not just a tech dream. It's strategic work to upgrade the whole system.
And there's another angle to ESG, environmental, social governance.
Ah, the green finance trend. How does tokenization fit in there?
It aligns really well, actually, because blockchain offers transparency, immutability, auditability.
Better tracking for ESG claims.
Potentially, yes. Think about carbon credits. Tokenizing them is a key example. The blockchain can ensure each credit is unique, traceable, and crucially can't be double counted, which has been a big problem in traditional carbon markets.
How does that work? How do you verify the environmental impact?
Often these tokens are linked to real-world data, maybe sensor data from a renewable energy project or audited reports from reforestation efforts. And guess what's needed to get that data reliably onto the blockchain?
Oracles. Chainlink again?
Exactly. Chainlink oracles can securely feed that verified environmental data on-chain. Smart contracts can then automatically manage the carbon credits, minting new ones, retiring used ones based only on that validated data.
So really robust, verifiable tracking.
Yeah. It could revolutionize impact investing. Investors get immutable proof of the environmental good they're funding. It adds a layer of trust and efficiency that's often missing today. Makes ESG claims much more solid.
Which would definitely appeal to institutions with ESG mandates.
Absolutely. It upgrades the integrity of green finance.
Okay, so we're seeing institutional interest, real projects, potential for ESG. How is all this actually affecting the markets and the wider crypto world?
It's having a clear impact on dynamics, yeah. for investors, traders, the whole ecosystem.
How so?
Well, we're seeing these RWA hype cycles, right? Similar to how DeFi summer happened or NFT booms.
Narratives driving price action.
Exactly. When MakerDAO leaned into RWAs or when Ondo and Centrifuge gained traction, you saw excitement, capital flowing in, token prices moving. It's a new narrative, tangible, yield-bearing assets coming to crypto. It offers a different story than pure speculation.
So traders can play these narratives.
Savvy ones certainly try. They spot the growing institutional interest, the project momentum, and trade based on that RWA theme, just like other sector rotations in crypto. But the driver here is tied to real-world value integration.
It's a different kind of catalyst.
And underpinning all this is that institutional safety aspect we discussed.
The regulatory warming trend.
Yeah. As the SEC engages, as frameworks like MiCA in Europe or MAS guidance in Singapore emerge, big institutions feel safer.
Less regulatory risk perception.
Which is absolutely critical for them to move from just watching to actually deploying serious capital. Billions, potentially trillions.
And that influx would change things dramatically.
Hugely. It brings validation, deep liquidity, stability. It starts to pull crypto from the fringes right into the core of the global financial system.
Okay, looking even bigger picture. You mentioned oracles being fundamental not just for RWAs, but for Web3 overall.
Absolutely. We established that secure data feeds are essential for RWA tokenization to scale. Without them, the trillions just won't happen.
So oracles are the bottleneck, or the enabler.
The key enabler. And that makes robust Oracle networks like Chainlink foundational infrastructure for all of Web3, not just finance.
How so? What other Web3 apps need real-world data?
Think about it. Parametric insurance paying out automatically based on verified weather data. Blockchain games incorporating real sports scores. Supply chain tracking that needs real-time location and condition data for goods.
Ah, okay. Lots of potential use cases.
Tons. Without a secure way for these dApps to access reliable off-chain info, their usefulness is limited. Oracle networks enable this connection.
Making Web3 more connected to the real world, more intelligent.
Exactly. Expanding its utility way beyond just finance into potentially every industry. That connection is key for widespread adoption.
So it's not just about tokenizing existing assets. It's about building a new internet-native economy that can interact seamlessly with reality.
That's the broader vision, yes.
Of course, regulation looms large over all of this. How's that landscape looking globally?
It's evolving, definitely, and it varies by region, but there's a clear trend.
Different approaches?
Yeah. The U.S., with the SEC, seems to be more through enforcement and dialogue right now. Europe has MiCA markets in crypto assets, which is a comprehensive framework. Singapore's MAS is also quite proactive with clear guidelines.
So different paths, but what's the overall direction?
The key takeaway is that globally, regulators are moving towards addressing and integrating tokenization. They're not ignoring it or just trying to ban it anymore.
They see the potential benefits too.
It seems so. Efficiency, transparency, they're working out how to harness those safely within existing rules. This global momentum, even with different approaches, signals that mainstream adoption is likely inevitable.
Which again provides more comfort for those global institutions.
Exactly. It creates a clearer, though still complex, path forward. The question shifts from if it will be regulated to how and when.
Okay, for listeners trying to track this space, what are the key things to watch? What metrics matter?
Good question. A few key indicators. First, keep that big projection in mind. $16 trillion in RWAs by 2030. Track progress towards that macro target.
The benchmark.
Second, watch how Chainlink's token, LENK, reacts to big institutional RWA news. If positive news consistently boosts LEN, it suggests the market values its role in this shift.
A correlation indicator.
Third, monitor the total value locked, or TVL, specifically in RWA protocols. MakerDAO's RWA vaults, Centrifuge, Ondo. Rising TVL means real capital is flowing into these tokenized assets. It's a direct measure of adoption.
Actual money on the table.
And fourth, for a really granular view, you could even look at Ethereum gas usage by RWA projects. Spikes in gas might indicate more on-chain activity, more transactions, higher demand.
Deeper activity signals.
Yeah, looking at those together gives you a pretty good picture of the sector's health and growth.
Okay, that's a lot to digest. We've covered the what, the why, the how, the who. The potential scale is immense, the infrastructure is critical, institutions are moving, regulation is evolving.
It's a complex but incredibly important picture.
Now let's pivot a bit and pose some questions for you, the listener. to think about. We've laid out the landscape,
Mm.
but your perspective matters.
Yeah, what do you think?
First off, do you believe tokenization is truly going to be that killer use case? The one that finally brings trillions into crypto and fundamentally changes how we interact with assets globally. Is this it?
It's a big claim, but is the evidence compelling enough for you?
Second, Chainlink. Given its role with oracles and secure data, is it really poised to become that indispensable backbone, the AWS for the blockchain world? Is its utility that fundamental?
How critical do you see that infrastructure piece being?
Third, thinking about investing. Your own approach. Would you lean towards putting capital into these RWA tokens backed by tangible assets, maybe more stable yields, or stick with more speculative crypto plays, meme coins perhaps, for the next potential bull run? What's your rationale?
Where does your risk appetite and investment thesis fit in this new landscape?
And finally, regulation. If the SEC, MiCA, others are genuinely engaging with tokenization, does that feel like a turning point for crypto regulation overall? Are we moving towards a more mature, integrated phase?
Does it signal a shift away from the Wild West perception?
Some big questions to ponder there.
Definitely. To recap, though, what this deep dive really highlights is that the future isn't just digital money. It's about digitally transforming all value,
Right.
bridging traditional assets with blockchain's power. RWA tokenization isn't just hype. It's a foundational shift with trillions potentially at stake.
Right.
And Chainlink's role as that secure trust layer seems absolutely indispensable. Critical infrastructure, like the foundational services of the web.
And the institutional interest, the pilots, the regulatory conversations, it all points towards real momentum and inevitable adoption, doesn't it?
Yeah, pieces are definitely falling into place, accelerating now.
So here's a final thought for you to take away. Imagine a world where almost anything of value, your house, your retirement portfolio, maybe even your personal carbon footprint, could be represented as a token. Instantly tradable, fully transparent, globally accessible on a blockchain.
Mm-hmm.
How would that fundamentally change your relationship with wealth, with investment, even with the idea of ownership itself in this digital age?
What new possibilities does that open up? What challenges might it create for you personally?
Something pretty profound to think about as finance undergoes this transformation. Well, that wraps up our deep dive today on tokenized real-world assets and Chainlink's pivotal role. Thank you so much for joining us.
Yeah, thanks everyone. Hope it was insightful.
We really hope you found it valuable and got you thinking. If you did, please do remember, like, subscribe, share it around. Your support genuinely helps us keep doing this.
Absolutely.
We'll be back soon with another deep dive into the crypto space. Until then, keep exploring, keep questioning, and stay curious.